News arrive late and in style as 2019 begins on a positive note. A last hour rally wipes out all the day's losses. Sensex gains 200 and the Nifty soars past 10,900.
Banks lead with gains after the Reserve Bank of India's financial stability report expects the first reduction in non-performing assets in over 3 years. The Nifty Bank Index ends close to 1% in the green, led by both public and private sector bank stocks gaining.
Auto sector hits a rough patch in December. Maruti Suzuki reports a drop in total sales. M&M also sees a decline in passenger vehicle and tractor sales.
Aviation stocks heave a sigh of relief after aviation turbine fuel prices are slashed by over 14% in Delhi. Jet Airways, SpiceJet, Indigo all end the day in the green.
Citigroup's chief economist Willem Bouter says global growth will slow down in 2019 and that will impact India's growth too. But India could get a GDP boost by the fiscal largest before the elections. This is a CNBC TV exclusive. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back, the first show of 2019. The show where we're going to tell you all that happened in those 6 hours of slightly lethargic trading. But we'll tell you all that stories in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nale. Hi, Prashant.
Lata, hi. Low on volumes, but not low so much on action. There was action, and the market actually did pretty well by close. Over the next 30 minutes, we will talk about the top 5 market headlines. Our guests will answer your questions. And to answer those questions that you send us every day, we have Deepan Mehta, member BSE NSE. On the charts, Mitesh Thakkar joins us. Gentlemen, thanks very much, both of you, for joining us here today on the show. But as always, we spend 2 minutes taking stock of the day itself. Because, I mean, it was a day in a way which lacked any, at least global cues. I mean, global markets were not trading, and we came back to that void. But in the face of it, it wasn't a bad day by 3:30. Lata.
Oh, yes, we were the lonely planet today. The only market trading, I guess we had Pakistan for company, I'm told, and maybe Bangladesh. But otherwise, no big market trading today. Therefore, low on cues. They're also low on volume if you looked at it hour by hour compared to previous firsts of any day of any month. So very thin news as well. And I mean, aside from the auto sales numbers, which are actually negative news. Therefore, perhaps the markets were gyrating wildly up and down because a small volume trade could create a big impact on prices. The best performance came from the bank index as well as the banking stocks. That was probably because the Reserve Bank had something nice to say on the asset quality as well as the loan growth in the financial stability report that was released yesterday. It said that net income as a percentage of total assets has grown for the banking sector. It pointed out that total NPAs have declined from 11.6 to 10.8. That is from last March to September. And from September to next March as well, it will decline a further half a percentage point to 10.3%. Maybe that was the trigger that helped the banks do well. But really, we are looking for reasons. I mean, you could look for an equal number of reasons why the market should not have done well. Yeah. The auto sales numbers were bad. The core sector numbers for November were nothing to write home about, especially in electricity and coal. But the market has chosen to ignore that. And I think it will continue to do that, as you said, for the week. Any other notable performances? I
mean, to add to the list of woes and negatives after market hours, we have the GST numbers as well, right? I mean, the market should pay attention to that tomorrow. So it's sharply lower. Well, but as far as stocks are concerned, let's just put up a couple of things which moved around, and there were actually quite a few things. So this is the pack which did very well today. It's the PSU Bank index did well. The private sector bank, the Nifty Bank itself was doing pretty good. So that's on your screen. And the auto index, on the weak side, we had autos, metals and consumption. Autos, as Lata pointed out, Maruti, Mahindra and Mahindra, biggies, I mean, disappointing. Top Nifty gainers, all banks, financials actually, HDFC, State Bank, ICICI. We had, Yes Bank, IndusInd Bank. And these are all large cap names which ended the day higher. So 6 financial stocks there on the Nifty which were quite good. On the losing side, a few. Mahindra and Mahindra, I mean, almost all of those near 4% losses came after the sales numbers came through for the month of December. Indiabulls Housing was down 1%, JSW Steel was down about 0.9%. I mean, no real big momentum on the downside as far as large caps go, or actually in the broader market as well. This is what happened in the broader market with gainers. Dredging Corp is having a pretty phenomenal, last couple of days. Big gains yesterday, big volumes. I mean, that's the one to note. 11 million shares traded. A lot of second-tier PSU banks. UCO Bank was one of them, 12%. Real estate, Kolte Patil, there were stocks like Atul Auto, and a few others which sort of shone through with decent-sized volumes. Prestige is another real estate name. There was Shankara Bilcon with about that 5% gain as well. So, I mean, enough stocks moving around, and of course the index being kept happy. Lata.
Okay, well, with that, let's go to our experts. Mitesh Thakkar, first to you. What did you make of the last hour rally? Have you taken home long positions? And do you think the market has a better chance of crossing 11,000?
Yeah, so I think, broadly it was looking like a range market which is slightly contracted. Time and again we have failed around the 10,940, 960, 965 mark. We can take the 30-point band. And every correction, I think, on the lower side has been bought into. So for the timing, it's 10,800 to about 10,950, 960. But I think, with the indicator setup still turning positive, I would still keep my bets that eventually we'll break on the upside. And once this breakout happens, 11,080 to about 11,100 could be tested. So broadly trading with long bias on stock-specific basis. On the indices, we don't have a long, but I think a fresh long can be created once we start getting past 10,970. On that breakout, take a 30-point stop loss and look for a 100, 120-point kind of a rally. I think a bigger direction move will come as we head into the result season. Till then, I think, we might look at 100, 120-point kinds of move and then consolidations.
Okay, so we move on to the second story of the day. Banks, as we described earlier, topped the charts today. The Nifty Bank Index ended close to 1% in the green, led by both public and private sector bank stocks. Axis, yes, SBI, HDFC Bank, you name it. The rally is probably due to the Reserve Bank of India's financial stability report, which hints at the fact that NPAs of banks have peaked and are on their way to some sort of recovery. We've got some questions, Lata.
Yes, this question comes to us from Latesh Bedi. He's written with a question on Axis Bank. Axis Bank, please note, has a new CEO starting today. Latesh Bedi has 60 shares of this bank, purchased at 616 rupees a piece, says he's a long-term investor. Should he hold? Well, first, Mitesh, is there a technical view since banks have done so well today?
In fact, Radha, Axis and ICICI both were underperforming the entire banking sector in the last few months and now have started to show, some improvements on the longer-term charts. My sense is that Axis should be held on to. I think once we cross 650, 660 zones, the stock can head towards 750 to about 775 levels. And that should be a target which the stock can do in the next 4 to 6 months. So I think there's another 20-25% kind of an upside which could happen over here. So it's just a plain hold.
Okay. Well, Deepan, actually this question is targeted at you because he is a long-term investor. So should he keep the stock? What can he reasonably expect?
Well, I think the investor should remain invested in Axis Bank. Clearly, the NPA provisioning is going to go down considerably over the next few quarters or so. It was about 15,000 crores plus in the previous fiscal, and this year onwards it should certainly go down, and that itself will boost the earnings of the company. Some of it has got priced into the stock, but I think still there is considerable way for Axis Bank to move up, purely on account of the fact that NPAs will be lower, and gradually I think they'll be able to grow their net interest income and get benefits of operating leverage as well. So I think best to say invest in Axis Bank for the time being. And maybe at some point of time, if the stock rallies, then consider switching out of Axis Bank into some of the retail banks where we are more optimistic, like say HDFC or IndusInd Bank. But for the time being, remain invested in Axis Bank.
Okay, so remain invested in Axis Bank. That's advice coming in. We move on to the third story of the day. Auto companies saw mixed performance in trade today. This after the auto sector hit a rough patch in December. As far as sales are concerned, this was not entirely unexpected. Maruti reported a drop in total sales. Mahindra and Mahindra too saw a decline in passenger vehicle and tractor sales. Anisha Jain is here with more granular detail about what the auto companies reported and how the numbers were actually received. Anisha, over to you.
Well, yes, let me start with one of the biggest nifty losers, and that was Mahindra & Mahindra. That after the company's growth rate really slowed down to low single digits. Now, the December auto sales grew by just 1% and came in at 39,750 units, and that compares with the expectations of around 44,000 units. The management has said that the challenges around liquidity and low buying sentiment is what has impacted sales, and you could see the reaction in the stock. Similar was the story with Maruti, because there also the growth rate has slowed. Actually, it is the exports which have declined around 36% year on year, and the total sales too down about 1%. As far as Eicher Motor is concerned, the numbers were a tad bit mixed. The CV sales were actually better than expected, but it is the motorcycle sales that has taken a big knock, because the total motorcycle sales has dipped by 13% in the month of December, and this is despite having an export growth of 40%, and this clearly tells you that the growth momentum in the domestic business is what is slowing down. SML Isuzu, another disappointment, sales decline of 16%. Escorts surprised positively because the sales grew around 27%. And lastly, take a look at Atulato. That reacted positively because the sales were up around 50% on a year-to-year basis. Back to you.
Okay. Thank you very much for that. Some more, of course, two-wheeler numbers are still due. It's a holiday, so perhaps not all the numbers have come in. But there are questions coming from viewers. NRK Murthy of Kerala has written to us with a question on Maruti. He's been holding 40 shares of the company, purchased at 9,000 rupees, 9,076 approximately. He wants a short-term outlook on the stock. What would you advise him, Mitesh?
Srilata, I think, Maruti has done extremely well from Feb 16 till about January 18, and now it's looking like it's getting into a sideways consolidation. I think 8,500 would be a difficult level for the stock to get past. Around 6,500, which is where the recent bottom was made. I think, there's a good long-term support area. So I would advise him, if he can average it out more, I think around 6,500, he should add more, get his average price down and try to exit around 8,500. I think next few quarters might be spent within this 30% kind of a price range.
Okay, so that is autos in focus. We're going to take a very quick break at this point. But before we do that, here is some market opinion that we got from IIFL's Nirmal Jain and Sameer Arora of Helios Capital. We spoke with them earlier in the day. Listen to what they had to say as we begin 2019. We come back, take more of your stock questions.
In 2019, I think it can't be a runaway year, I think, initially. But it's going to be a positively trending year, and then we see what happens in May. But it won't be a year where you are, you have to be bearish from day one. We are going in bullish, but we know that you can't have a runaway rally, I think, till these things get sorted out in terms of election outcomes and all. And after that, you could actually have a very good year if the rest of the world doesn't fall apart. Currency stops depreciating is such a big deal for foreign investors. And now it looks at plus minus, even if it goes back a little bit, but broadly it is stabilized. And that itself takes away many of the hesitation that foreign investors may have. In terms of fundamentals, clearly all these things add up: oil down and currency stable, and GST and all those things having taken more time.
The first half, because these are on the election year, and the elections will be over in first half, and the new government will be in power. So I think you'll see a range-bound market with not much happening. I'm very optimistic about the outcome of the elections, and then I think the second half therefore will be very good because as people see clarity, then from a macro fundamentals, India is a great country. It's the fastest growing economy. Oil, as it is around $50 or even $50 to $60, augurs very well for our macro. And given all those things, I think second half will be very good, and first half will be range bound. Broadly, first half investors will be cautious, and they should be cautious for good reasons. And second half is something when we'll have a clear trend emerging.
We are, of course, also taking stock of the top 5 stories. We got through 3 of those top stories, so here's the next one. Aviation stocks heaved a sigh of relief. Jet, Spicer, Indigo all were in the green today. This after aviation turbine fuel prices were cut by over 14% in Delhi. This is the second consecutive double-digit cut in the last 2 months. Sonia is here with more details on this. Sonia.
It's the second consecutive cut in ATF prices, and it's a double-digit cut that we've seen for 2 straight months. So in the month of January, ATF prices were cut by almost 15%. In December, it was cut by 11% month on month. And before that, there was hardly a single-digit move both ways for the last at least about 8 or 10 months. Now, ATF prices, as we know, account for 40% of the operating costs for aviation companies. And in the first half of the year, things were very bleak for the sector as a whole. The 3 listed airlines had a combined loss of almost 3,700 crores in the first half of the year. That's a loss of 20 crores per day. So the second consecutive cut in ATF prices will definitely boost the earnings for the aviation companies. That's the reason they are up and about today.
Oh yes, steep cuts in aviation turbine fuel. Fareed Khoja from Mumbai has written to us with a question on SpiceJet. That stock did well today, 2% higher. He's been holding 18,000 shares of the company, purchased at 150 rupees each. He says he's a long-term investor, wants to know if he should hold or sell. Well, that question to you, Deepan, what would you advise him? SpiceJet at 150 rupees.
Yeah, I think he's got a good holding. Of course, the price has come off significantly from the levels he has purchased. But nonetheless, I think the prospects for aviation companies is certainly improving, and SpiceJet is amongst the leading airline companies with a relatively strong balance sheet and should be able to take advantage of lower fuel prices. And they should be able to grow their traffic and grow their market share as well going forward, considering the kind of new aircraft which they are getting into their fleet. So I'm quite hopeful that maybe not 150 price may not be reached over there, but definitely I think some of the losses could be curtailed over the next few months as SpiceJet and other aviation stocks move up. Maybe it's a good idea to do some averaging as well over here to bring down the cost of holdings.
HCC was the other stock which continued its march northwards. It was higher. Remember, the stock has made considerable gains during the last few trading sessions. It was one of the big gainers yesterday. And today also, at one point, it was up about 10%. It came off the highs. The HCC raised almost 500 crore rupees via a rights issuance only last week. We got a question coming in on HCC. Vivek Dutt has tweeted to us. He's got 1,000 shares of the company at an average price of 26 rupees. He's been holding them for the last 2 years and wants to know whether he should continue to hold or sell here. 1,000 shares of HCC cost is 26 rupees. Deepan, any views here?
Yeah, I think certainly the prospects for the entire engineering construction companies has looked up, and HCC in particular, apart from the rights issue, they have got many favorable orders for the projects which they have completed, and if they start receiving the arbitration awards, the actual cash comes into the company, then they would be able to significantly reduce their debt. And also I think they have the subsidiary company which is in a bit of a problem situation, the Lavasa. If that some resolution is found over there, then that would be an added trigger for the stock. So I would say best to remain invested in HCC at this point of time. It's a low price stock, and if there's any positive news flow, you could see the stock price easily going up by 30-40% or so. So either remain invested, and perhaps if a little bit more risk appetite is there at the investor end, you could look at averaging also at these prices.
Okay, incidentally, I think it has risen about 30%. HCC in the past week, if I'm not mistaken. I mean, we keep seeing it in some sterling performances in the past 2-3 trading days. I think ever since the rights issue came. Yes, the week percentage is 23%. That explains 2 days of gains on HCC. One day 20% and today another 3%. Well, with that we come to the last headline today. This is a CNBC TV exclusive. We spoke to Citigroup's chief economist, global, Willem Bouter, and he believes that global growth will slow down in 2019. That will affect India's growth as well. But India could get a GDP boost because of fiscal largesse before the elections. Not a very healthy thing. It will create instability. But yes, we could get growth because of fiscal slippage. Listen in to the economist's view.
Globally, I think 2019 is likely to be a year that most of the world slows down. Not recession material yet, but a distinct slowdown. The US and China both are scared to slow down for purely domestic reasons. On top of that, we have the trade conflict. On top of that, we have the the temporary partial shutdown of government in the US. We have uncertainty in Europe, both related to Brexit and to rising populism. So there is more than enough, I think, to make for a steady global slowdown during 2019. For the next 5 months until the elections, right? I think we're going to have excessively loose fiscal policy and attempts to loosen monetary and credit policy as well. And I think a price will be paid for that after the elections. There should be a slowdown in Indian economic growth simply because of the worsening external environment. This can be offset to some extent by a greater fiscal stimulus and credit stimulus, but that would lead to a more unbalanced economy.